In international business, the real founder is not always on paper. Sometimes someone else signs the documents, but the real control stays behind the scene. This is done using indirect control tools. They are legal in some countries, not legal in others. Banks usually hate them unless disclosed, but they are widely used. So let's break it down. What these tools are, when people use them, what banks say, and what the law says in China, Hong Kong, and Singapore. What are indirect control tools? These are legal ways to control a company without being its legal owner or director. They include shareholder agreements, secret control through contract, share pledges when shares are used as collateral, call and pull options, buy and sell rights in the future, voting rights agreement, voting control without shares, and side letters and proxies, private terms that override public records. These tools let you make decisions, get profits, transfer ownership later, or limit the power of the person on paper. Why people use them? Sometimes for bad reasons. Hiding ownership, evading sanctions, tax evasion, or worse, money laundering and illegal trade. But not always. Many founders use them for structure the relations between partners, splitting ownership, delaying share transfers, protecting investor rights, or reducing risks in the new market. For example, you give 20% to a local partner, but sign an option to take it back if local partner's performance isn't good enough. Or a big company launches a local venture. They use a partner's or employee's name, but plan to transit control later. This allows them to avoid internal bureaucracy, and it is normal in business development and cross-border expansions. Another reason to use these tools is protecting a clean business from unfair barriers. If your passport causes troubles, you may not get a bank account, no access to payments, scare away suppliers, or trigger enhanced due diligences. In that case, some founders use indirect control tools to stay in the business. So all in all, it's a gray zone. That's why banks and companies like ours always check the purposes for which you use them and identify your UBO. Now let's look at the legal status. In mainland China, only the person or entity listed on paper is recognized by law. If you have any side agreements, it means nothing in courts. If your nominee disappears, you can lose the company. That's why serious founders never register a China company in someone else's name directly. What works instead? You open a company in Hong Kong or Singapore. You set up indirect control there, then your parent company registers a subsidiary in China. That way you keep control legally. So what about Hong Kong? Yes, it allows indirect control. You can sign shareholder agreements, options, pledges legally. Courts will enforce them if the paperwork was good, but the public registry only shows legal owner and director. If you use a nominee, banks require you to tell them about it. So what it means? It is hard to find a nominee directors for Hong Kong company because nominee will be fully liable. So it is better to use a real partner who also is involved in your business. Bottom line, Hong Kong is suitable, but structure it legally. Make smarter documents, prepare to explain it, and better choose real partners, not just figureheads. Singapore, very similar to Hong Kong. Indirect control tools are legal and common and also require proper documents. Nominee shareholders, legal. Nominee director, even mandatory by Singapore law. But again, being legal is not enough. Banks will check the whole structure and require you to tell everything. So you need good documents, clear explanations, and clean structure. So how to do it safely? If you decide to indirect control, do it smart. Make it legal and treat it like a system. Choose the right jurisdictions, not China. Sign real contracts, not verbal promises. Get legal advice, not just templates. Be ready to explain it. And above all, choose your nominee carefully. If they vanish, you might lose everything. Final thoughts. Indirect control tools are not magic. They are not a loophole, they are just a tool. So if you use them well, they help you. If you misuse them, they will bring more problems than solutions. So be smart and be honest. Thanks for watching. Subscribe if you want to know more about global business and Asia, and good luck with your business journey.